You guys see my screen? Yeah, okay, cool. Perfect. Start off on gold. I took a quick peek last night, like after I took my Euro trade and stuff, and I was looking at what we could possibly see on gold. I feel like we could start seeing a good move to the downside possibly. We'll see. But yeah, let me know. I don't know if there was any other trades throughout the week. I'm gonna go over the higher time frames right now. Um, there was longs, right? Was it this week? It was. Yeah, it was this week. These longs were nice on the way back up. Yeah, those longs were nice pre. Actually, you know what? Let's go through those first, and then we'll talk about higher time frame after. Because I remember it wasn't last week because that I wasn't here for that webinar, but the week before, I told you guys that we could see a move back up. Um, and I mean, 700 pips. You took gold shorts on Monday. Okay, cool. Let's go over that as well. But we talked about how we had this build up, right? So I remember a lot of you guys were trying to look for shorts in here, and it makes sense now why there was no shorts, right? We just built liquidity, sold off, grabbed all the lows, all right? And then we had that bullish move back up where? Right into those highs. So it all makes sense now, right? But the problem is sometimes this happens on a higher time frame basis. So there's not going to be any trades for the course of a couple days, right? So this is the name of the game. This shit happens sometimes. But again, it all makes sense now, right? We built this seller liquidity here, took the lows, and then we slowly went back up all the way to the highs, right? So let's check out some trade opportunities. So I'll bring it out the replay here just so we can see the stuff. Okay, cool. So Monday's down here. Um, Abid, you took okay, so yeah, the shorts are gonna be over here, it looks like. We'll cover those. Right away, I can see, and this is all I'm gonna be looking at for the first time too. So I can see here we have respected highs to the left-hand side. Okay, moved away. Trapping buyers here. Okay, so grabbing this structure, trading below the structural low. Before trading below it, you can see we get this reaction up. So I'm assuming that, but this is where your long or sorry, your shorts were. And I'm just yeah, I think I can see it. Perfect. So we trade below this low. Why is this important? Induces sellers. We all know this, right? Now we want to see price above this high. All right, let's open it this up with a 5 minute. Perfect. So this was in London on Monday. Sell off to the downside again, just ever so slightly trading below this low, but retail will see this as a BOS. Okay, these pattern traders will see this as a BOS. Okay, trade below the low. They want to see price back up here. Continuation to the downside. Okay, simple stuff. We understand that. So we want to see price above this high now. Okay, if we want to look for shorts. And then yeah, if you, I'm assuming Abid, you took it off this, right? This liquidity block. Yes, sir. Yeah, perfect. So Um, anywhere above this high, again, we talk about how anywhere above this high would be the sell. And then you'd have to look for either a refined entry in here or a liquidity block from the left-hand side. And there you go. You have your liquidity block from the left-hand side. So where can you enter from? I guess from here, this would be like a higher time frame, taking the whole liquidity block. If you want to look for like a refine, let's see what the 15 or 30 looks like. Yeah, so see how we have this whole big imbalance here. This whole area again would be like I'm assuming like a 31 hour or something like that. Yeah, so you see, it's like a 30 minute here. Essentially anywhere in this imbalance. Again, it depends on what your plan is, risk to reward wise. If you want to reach that 1 to 3 minimum, probably would have to wait for it to come a little bit deeper, right? Um, and you get your 1 to 5 just like this. I took at the 15-minute tap. Yeah, let's check that out. Yeah, perfect. So as soon as the 15-minute tapped here, um, just like that, and I guess you open up stop a little bit for spread, and back down to the low. Okay. Why are we targeting this low? Because we understand that any reactions at this low are going to be false. Okay. You look how we have respected the low here, moved away. Perfect. And then again in New York, early New York, or sorry, actually, Pre-New York, we respect the low, move away, trap sellers, liquidity block. This is just screaming shorts back down. Okay, back down to this low. After this low is taken, this now becomes inducement high. You can see how we have all this liquidity. So you should be exiting your short position um, after the low is taken for sure, or at least majority of your position should be out, right? So yeah, clean short. Honestly, to start the week off on a Monday, that was a really clean short. False reaction up, and you short back down, right? After that, the early sellers have been taken out. And then the longs, I haven't even looked, so I don't know. Did anybody take the longs back up? I think it looks like there was a nice entry. Yeah. Buyers induced, same thing. Buyers trapped, have some sort of a liquidity block down here. But from the looks of it, the timing was just, yeah, the longs were in Asia. Yeah, the timing was tough on this. So one of those where there's been times where I take these kind of entries. Since it's a higher time frame, I guess you could take it like this after the low's taken, and then you cover the whole low down here. And then again, since it's in Asia and it's probably most likely going to be a limit entry, just something I would do. I'd probably cut my risk down as well. Okay. But then it would give you a 1 to 5 back to the high. But then it looks like, yeah, New York, there was more opportunity. Perfect. So trap over here. Any reactions are just again going to be an opportunity to buy. We get a sell off to the downside. Let's open up this PA in the 5 minute. So take out a high, induce higher to induce buyers. Okay, we even get false reactions over here. Buyers induced, and we continue selling off to the downside. It looks like we even get a nice trap here. Induce sellers. Okay, why is that important? Now sellers are going to be looking to short here. Gives them a little reaction, and then we get a pop higher inducing buyers. Okay. Now that we've induced buyers, again, same concept. Okay. Buyers want to be looking at areas to buy from, I guess, from this 5 minute imbalance or maybe something more refined at the extreme. Okay. And then if you look to the left hand side, you have liquidity, internal liquidity left. Perfect. And look at the liquidity block that we have to take this entry off of. So anywhere below this low would have been a buy. Okay. Again, when you over refine it, sometimes you're not going to get tapped. So look at this example here. If you wanted to wait for the candle tap, you're not in the trade. Okay. So as we know, as soon as that liquidity is taken and then price is actually trading in that liquidity block, it doesn't have to fill it all the time. Obviously, there's been examples we've gone over many times where price fills the whole imbalance, but it doesn't need to happen. And is it worth it to not be tagged in over there? Like, what is this? 3, 4 pips on gold, which is absolutely nothing. It's just not worth it. Um, so again, as soon as this liquidity is taken, you can look at it from a structural standpoint as well. Look at we have take the high, price returns back to the low, moves away. So we have this structural liquidity left. You want to wait for price to stab the low. Perfect. Just like this. And targeting the high. So, I mean, we always talk about and go over entries. But remember, the most important thing always is going to be direction, right? Because it doesn't matter how good your entry is. If your direction's not correct, um, then it's almost irrelevant, right? So, of course, the entry looks good nowadays, but we can all pinpoint the entry. It's almost just like a pattern for us to wait for, all right? But the most important thing is identifying the direction here. And it's honestly, it's quite. I'm getting buzzes all over my phone. 1 second, let me just put do not disturb. Um, Quite simple. Okay, false sell off. This is what you want to wait for. This whole move to the downside, guys. This is what you want to wait for. All right, this is what allows us to buy back up. Okay, because this false sell off to the downside runs liquidity. It traps buyers, and that's what we want to see. That's what provides us the opportunity now to buy back up. Okay. The hard part is waiting for this to occur sometimes. So a lot of you guys will try and trade these micro movements in between and not wait for this price action to occur. Because look, from this point up here down to where the liquidities ran, I mean, of course, this was over the course of, I believe, Christmas holiday, so it's kind of hard to gauge it. But still, almost 4 days of price action. My God, I'm getting notifications all over my computer and I don't know how to turn it off. 1 second. Okay, I think I'm all good. Okay. But yeah, this is what you want to wait. This is sorry, this is what you want to wait for. This is the most important part. waiting for that false sell-off to the downside. Okay, so if we're bullish, we want to be looking for buys. You need to wait for that false sell-off to occur. Because again, that false sell-off, I always say, is all it is a run of liquidity, right? That false sell-off induces sellers into the market. And you still, again, of course, you want to wait for some sort of liquidity target as well. So we have all these highs that we've built on the bearish move down. Not only that, we've respected the high to the left-hand side. And then again, if you zoom out on the higher time frames, we have many reasons to go higher. Okay? Don't forget the higher time frame perspective. We have this higher time frame internal liquidity we've left on purpose, and we've also run higher time frame liquidity to the lows. So it all makes sense for us to go higher. But again, this is where everybody fails to wait and take unnecessary trades for this sell-off to occur. Okay. And then again, once the sell-off occurs, it's just so easy to trade back up. Literally, all you have to wait for is just traps and liquidity blocks, and you buy, and you're gonna win so much more. But again, waiting for this to occur is where a lot of you guys will take unnecessary L's. It'll do your head in, and then when the easy buy comes through, your head's already done in, your confidence is shot, your accounts are blown, whatever it is. Um, so make a little mental note of this, like patience, patience, patience. It's as easy as just telling yourself if you don't see anything in this current moment, if nothing makes sense, then just wait. Okay. If you're familiar with the system, when the trade comes along, you'll see it. I can promise you. All right. But yeah, clean as ever. Super, super clean long. Honestly, even just to this internal point up here, you're looking at 1 to 10 or 330 pips, whatever you want to look at. And then in your next partial point, 580 pips. Can't try to be in every move. Yeah, you don't need to be. Quality over quantity. I tell you guys all the time. Quality over quantity. Um, but yeah, super clean out of gold. The short down I liked as well. I liked a lot. But again, the buyback up was even nicer. Of course, you have that first entry coming in Asia. So being again, I don't really want to be unrealistic, but getting in here would have been difficult for most of us. But then we have the opportunity in prime time New York, right at New York Open. But yeah, looks good. As for any continuations, I don't see anything here. Would have been in Asia anyways, and then in London, was there an entry here? No, honestly, there's not going to be no entries. After that, right? You have the two down here again. Asia, not so much, but New York, prime time, clean, clean, clean. So you have the short on Monday, and you have the long on Tuesday, and that is more than enough. More than enough. And M5, I think, yeah, but even that, it's just we'll take a look anyways. So you have highs taken, lows taken, nothing from the left-hand side of taking the entry off of. Um, eh, it's not bad. Reason being was because you have high, low liquidity block. Okay, so that works. Um, and again, the important thing about this is, look, this line I've dragged over for the left-hand side, we have yet to run this yet. So this is that liquidity, right? So a lot of you guys are going to say, oh yeah, but we've taken out this high here. But the important part is look how we've created another area, another trap. Okay, another area for buyers to get induced from. After taking out this high here, this is now going to be an area that um, buyers want to be taking entries from. And you can see how we built liquidity there. We traded within this area for quite a bit of time. If I check, so almost an hour that we were trading within this false area, and then we get that sell off, okay? And we trade right into this 5 minute area down at the extreme. Oops. RR wise, yeah, let's check it out. You would have had to wait for the extreme to be tagged in, and then your RR would have made a little bit more sense. So 1 to 2.5 to the high. So yeah, in this example here, it's okay to take this trade, but what you have to do is as soon as this high is taken, this one I got marked out, as soon as it's taken, you got to BE it, okay? Because now again, now your entry becomes an inducement low, and we've left liquidity. So if it runs, perfect, right? Perfect. You can reach that 1 to 3. But if it decides to run the highs and come back to your entry and beat you, it doesn't matter. It is what it is. Okay, so these are one of the trades where if it runs, perfect. If it doesn't matter. Then it's not meant to be. All right. But still makes sense. But yeah, clean stuff on gold. Now let's check out higher time frames because I was looking at that yesterday, and I don't know. You guys give me your opinion. Maybe I still got to get into the swing of things, but we've come into this high here, taking out this high. I went to the weekly just because I wanted to see what the weekly ended up looking like end of the week. And we've taken out weekly high. Okay, this was acting as a liquidity block. Okay, now is it possible for us to run to weekly low? Okay. Daily internal too, I think might give reaction to the downside. Yeah, it's definitely possible. Head on to the 4 hour. You can see we've now left all these lows. Okay. And that big bullish move up to grab that liquidity. Now we have again weekly high, weekly low. Seven as are taken. Yeah, exactly. I love how you counted all seven. But yeah, if we end up getting that move, I mean, you have high to low. This is like an 800 pip range. So if we're able to find some sell setups on the way down, it makes sense. Um, would be a nice move for sure. But yeah, the buy up was nice. Now let's see what the next week unfolds. It'll be the first full trading week of the year. Um, but yeah, let's see. Gold is looking good so far. Almost little to none liquidity to the upside. Yeah, it makes sense for us to. It doesn't. It's not off the cards for us to induce higher once more. Okay, maybe respect something here. Go higher once more before selling off. Um, but yeah, that's why we just gotta wait and see what price gives us. All right. But yeah, that's what I see on gold right now, especially from a higher time frame perspective. Actually, you know what? Let's look at the monthly. I haven't looked at the month. Hard to say because we're continuously just trading within our previous month's high and low, right? So look how we November's high and low, December just traded within it, and now January we're still trading within it. So it's not impossible for us to come down, maybe sweep November, boom, tap something over here to the left hand side, maybe continue up. Um, Possibility. I don't know, but we'll see. That's just scoping at the monthly. Other than that, on the monthly, nothing looks too interesting. I grabbed all that information from the weekly over here, right? We grabbed weekly high, possibly can come down a weekly low. Again, acting as a liquidity block up here. Yesterday's short, we'll take a look at that. Let's see. Copy link. This looks good. New York. Wait. This entry I don't like too much, Preet. I'll tell you why. Um, I would have wanted price to trade above here. Okay, because this whole area is being just completely respected. So this whole area is being respected. Look how we tapped into it once, moved away, tapped into it again, moved away. So like there's liquidity being built in this area. It would have been nice to have a run of that because then you have a liquidity block above. Other than that, I don't see much of an entry-ish. Yeah, nothing too pretty. Maybe up here. Yeah, up here looks nice. What time was this though? This was London. So sellers induced. Okay, we sell off, induce sellers. We respect the high for a little bit, building liquidity. Perfect. And then we trade higher right into a liquidity block. Boom. That was a nice opportunity to sell. David, can you do you mind sending me like a link when you send a chart just so I can see it better? But yeah, no, you know what? I can see it. Yeah, yeah. Better to wait for here. Yeah, yeah. That's what I'm talking about. So above these highs. Yeah, yeah, for sure. But other than that, there was a sell opportunity, but it wasn't London, so it's irrelevant for me. But for you London traders, this was an opportunity to sell for sure. All right. And then once these internal lows were taken, you can manage your trade, meaning you can BE it or you can roll your stop above this high, right? So if you took it over here somewhere, stop above your liquidity block, as soon as you reach this point, you can now roll your stop here. So you cover like half your risk, right? And then you hold to maybe take a partial here, maybe take a partial here, okay? And then hold small peanuts to your higher time frame areas, whatever it is. Because you definitely have some internal left here. Maybe we'll hunt for that. Okay. But yeah, other than that, that's it for gold, it looks like. We'll cover. I want to go over my long yesterday on Euro. Um, cool. Okay, so this sell ended up being so nice as well. One sec, let's go on the daily and look at some higher time frame here on Euro. But yeah, we spoke about this, right? You have that run of liquidity. Okay, trap those sellers. Look how we've induced those sellers before taking it out. Wait one sec. We've induced those sellers before taking it out. Put this as red. Perfect. So we get false reaction to the downside. Okay, and then that continuation back up to trap the sellers. Now you have an inducement low as a partial point. Okay, and then a possible structural low to target as well. So look how we respect the low here. We engineer liquidity. Okay, and I can already see that we print some structural. Look how we have high, low. We induce higher once more to induce those buyers and then just sell. All right. And I believe this is probably like a fill of like a weekly. Yeah, it just taps into like a weekly imbalance, fills the whole weekly imbalance, grabs weekly high, and then hunts all the way back down to the low. As for entries, not too sure. Was there entries in here? This was London, Tuesday. So here was the extreme. Um, Looks like we get sellers trapped here. Okay, reaction down. This is in Asia. London Open is right here. So we run this high. Okay, we run the high here. We get a reaction down, just building even more liquidity here at this internal low. London Open occurs. Let's see. Run this high, and then yeah, I'm assuming it runs for something on the left as well. Yeah, perfectly. So we take out this high again, inducing buyers, running for that internal liquidity on the left-hand side. So that's that inducement from the left. And look how as soon as we take out this high, that extreme is now printed. Okay. As for entries, I don't know. Did you guys see something over here? Let's take a look. Maybe on the M1. Hmm. Nothing too pretty. I'm gonna be honest. Maybe here. No. I don't know. Did you like anything here? I don't like how we traded below this low, whatever. But after that, like it's just a big leg of an imbalances here. There's nothing too pretty. We build liquidity here, sure. But other than that, nothing I like as for entries. Which is unfortunate. No entries on Euro on this short. Directionally wise, so clean. I mean, again, if we just zoom out to the higher time frames, respect the low and just induce buyers, right? Think about anybody looking to see this as a support or Fibonacci, whatever it is. Since we've taken out this high, they see it as a BOS, right? So maybe an area for them to be drawing out their POIs from. Okay. And I believe we even get, look how we stab the low to induce sellers. Oops. Stab the low to induce sellers, trap them. Okay. Then we get this choppy retracement down. Look at this massive buildup of liquidity we get. We induce higher once more. So there's that BOS to the upside. Perfect. Look at all the liquidity we left. It's just unfortunate there was no entry. Oh yeah, I remember I looked at Discord that one day. A lot of you guys took a pound what sell? Yeah, pound sell. We'll cover that. Well, actually, you know what? Maybe Abid will go over that, but let's go over my longs before I toss it over to Abid. So all I saw, honestly, very simple stuff here. Very, very simple. Higher time frames. Let's go on the 4 hour. We take out this low from the left-hand side. Wait, did we take it out? Let's go on the daily. Oh, we haven't even taken out that low yet. Okay, so grab this low from the left-hand side. Looks like we're still gonna have further downside, to be honest with you. So maybe we'll come up and fill like a higher time frame imbalance again or whatever it is, or run some internal. Um, so downside on the higher time frame looks still possible, but we've grabbed this low from the left-hand side. And I'm just looking for something, a buy back up. to target internal. So you can see how we've left all this internal liquidity here. Simple stuff. Sellers selling in this type of price action, right? You have trend line, whatever it is, order flow, and then you get the massive sell off to the downside. So I'm just looking for a simple buy back up. That's it. I'm going on I believe it's taking on there's two opportunities actually. So high taken out. We get a retracement back into imbalances over here. We go long again. High taken out. So just simply taking out highs, inducing buyers, trap buyers here, trap buyers here. Look how we have a beautiful liquidity block right here. So this would have been one entry. This coming at 10:30. Look how 10:30 opens up. If you look at my cursor, this is 10:25. 10:30 opens up, stabs that. So if you look on the 30 minute, look at that. So 10:30 opens up, spike out the previous 30-minute candle, and then we start going long, right? So let me just clear all this so it looks a little bit cleaner. I'm on a new keyboard, guys, so bear with me. I don't even know the binds to all these things. Um, but just looking at the 30-minute, look how we grab this low, trap buyers. Okay. We understand that any reactions below this high, okay, these are my favorite entries. Okay, this is just a straight Da Vinci entry. Any reactions below this high are going to be false. Okay, I'm not saying they're always going to give reactions, but anticipate it because if they do give a reaction, it's just going to be an opportunity to buy from. So I saw this as a trap. Okay, I marked this on the mentor section, but yeah, false reaction here. I can see we've left internal liquidity. Okay, so I wait for price to trade below this low. I look right below. I had a little 5-minute area here. Even if you wanted to refine it down to the 1 minute, you can see there's an imbalance right here. So however you wanted to look at it, again, the entry candle doesn't always get tapped fully. So as soon as this low, I don't even know if this low actually would have made sense RR wise. Let's check it out. Still perfect. Still perfect. So as soon as this low's taken out, again, always cover. Don't be greedy. Always cover that liquidity block that you're taking the entry off of. Okay, so um, another thing I wanted to talk about with you guys is everybody is gonna have different entries. Some people are comfortable with taking it as soon as the liquidity is taken. Some other things I've seen people do that work beautifully is they wait for a little rejection, just waiting for some sort of. So again, if we're buying here, waiting for some sort of bullish closure. So you can see here we have like a bullish engulfing. Still cover the liquidity block. But these are all things that you guys can test, see what you're comfortable with. Again, some people like just taking it as soon as the liquidity's taken. Some people like waiting for the imbalance to get tapped into. Just find what works for you. Um, and yeah, test things out. But again, anything would have worked here. You could have waited for the low to get taken, imbalance to get tapped into, entry candle. There was every single thing. If you waited for the entry candle, look at the precision this would be. Still clean. Long taken all the way back up to the highs. You can see we respect the highs once more, which was ugly to see because it was late in New York, but then we get that continuation up. Okay, right into the highs. Simple stuff. But these are my favorite. These are my favorite Da Vinci entries. Just waiting for this false reaction to the downside. Okay, after taking out lows here, because this induces sellers. They see this as BOS, right? Same thing. So we can anticipate this reaction down. If you get it, it's just these are my favorite buys back up. All right. But yeah, that's my first trade of 2025. But I'm excited, yeah. For first full week, we'll be back on Monday. But yeah, that is it for me. I'm gonna pass off the rest of the webinar to Abid. Um, but yeah, Abid, you all good?
Yeah, I'm good. I'm good.
Nice one. I'm
What's
gonna
going on, guys? Let me share my screen. Yeah, you gotta allow me.
yeah, you should be good. Try and share.
uh, yeah, can you see it?
Perfect, yeah.
All right, so let's talk about GU. Delete everything. Okay, so on GU, you can see. Let's see, it's all right. Because if you go on the higher time frames on GU, if you go to let's say the daily, you can see that it's been respecting this whole area right here, just building that liquidity, right? So came here, respected it. You got your BOS to the upside. And ever since it's just been going lower, right? So if you go to the 4 hour time frame, actually, let's just go down to the 1 hour time frame. So on the 1 hour time frame, you can see that ever since I mean each time it just comes here, builds more liquidity, and then starts what do you call it? Inducing buyers and then just coming lower to trap the buyers, right? So right here, you can see all of last week, the market was respecting this whole area right here. Okay, so you got a lot of liquidity to the downside. And okay, so I believe this was Monday. Okay, so Monday, market comes here, builds all this well, I mean Friday builds all this liquidity here, has this false move to the upside, and then you can see clears this right here. You also got this right here. And then let's go down to the 5 minute time frame real quick. Okay, so after clearing that, you can see that the market comes here, builds that liquidity to the upside, comes here, takes out this flow, inducing sellers, and then has that move up, right? So traps early sellers, and then starts trickling down to the downside. In terms of entries, I don't really like. I would have waited for price to actually come above this. But yeah, just understanding that there's a lot of liquidity to the downside. Now that the move happened, so Monday, the market comes all the way down to this low, right? Respects the lows over here, and then starts moving away. Okay, so that indicates that there's, I mean, you already know there's a lot of liquidity to the downside. This is just engineering more liquidity. So all you have to wait for is a trap of sellers, and then you can sell to the downside. So going to the 5 minute time frame, let me actually draw this line across. Boom. Okay. So on the 5 minute time frame, you can see that there is a liquidity right here that was being engineered. Okay, you got this little structural liquidity, right? Takes out this low, pulls back and respects this high, right? So you got that structural liquidity there. Also, you can see while the market comes up to there, it's taking out the high each time, right? Inducing buyers, and then you get this right here. Did it take it out? No. Okay, it didn't take it out. Okay, so what happens is market comes here, respects the low again, goes higher, takes out this liquidity. Okay, I believe this happened on Tuesday. During London. Okay, so after taking all that liquidity, the market moves lower, and all it does from 5 a.m. or I think 6 a.m. Yeah, 6 a.m. New York time, all the way until 9:50, like 10 o'clock New York time, is just building that liquidity, right? So you can see that's, let's see, that is 4 hours. So for 4 hours, the market's just building that liquidity. Okay, you got your channel right here, right? All that liquidity right there. And then comes to this whole area right here, where you get that move up, this false move up, taking out this high, breaking that structure, right? So inducing more buyers. And then, so entry wise, I would say you could take it just straight from here. Unfortunately, it doesn't happen to this imbalance right here. But let's say you took it from here, and then your stop loss is going to be pretty big. This is more of like a higher time frame type of entry. Just basically, if you do it off the 15-minute, and then or even this 15-minute tap right there. Yeah, pretty much. So, and then just targeting partials down here maybe, and targeting the low to the left-hand side, right? So this whole area on the daily time frame that it's been respecting, that was a good target. Okay, so if you took a higher time frame entry, you get a nice 1 to 6, I believe. Yeah, 1 to 6.8. In terms of refined entry, there was a refined entry, I believe, on the 1 minute time frame. So you see on the 1 minute, let's go like this. There, okay. Actually, let me delete this one. All right, so the 1 minute time frame, you see this move up, this false move up, inducing buyers. You got a shit ton of liquidity to the downside right here. Right? And then 1 second. Yeah. So then on the 1 minute time frame, this right here, right, you got your boom, induces sellers, and then trap, right? That right there. Quick little entry right here, and then straight to the downside. Right down to little partials here, maybe. Let's see. Little partials at these lows or structural low, and then holding the rest to this low. So yeah, definitely I would say taking partials at structural low is important because it could easily go higher. As you can see, Asia came up to here and then continue lower. Obviously, because it's just been respecting this whole area, it should just continue going lower because it's already taken all the liquidity from the upside. So yeah, but taking partials at structural lows and highs are very, very, very important. So like right here, take partials, nice 1 to 6, and then hold the rest to that low from the left-hand side. So that's it for GU, which happened on Tuesday. Entry was given on Tuesday. And then I believe Wednesday. What happened on Wednesday? Oh, New Year's. Damn, I forgot. So yeah, so that happened on Tuesday. And then obviously because of this huge move down, right? Friday is probably just gonna consolidate. And then yeah, pretty much that's for GU. Let's go over my trade on NAS that I took on Friday. Okay. So all right, so let's see. NAS, okay. So NAS on the second. Okay. So NAS, if you look at NAS on the 15-minute time frame, you can see that came all the way up here. Took some over here and then just started moving to the downside. Okay. After that, it's just it's very I'd say yeah, it's moving to the downside. Each time is just pulling back and then moving further down. So yeah, so NAS moves to the downside. You can see it's building that liquidity for later, right? So right here, you got the low taken out, pulls back, and then it's just building that liquidity, right? So you got that liquidity buildup, and if you look at it right here, or it's respecting this whole area right here. All right, so if you let me zoom into this area, boom, right there. So I believe this was, yeah, so the entire week, Nas was just moving to the downside, but each time it's just been building that liquidity below here, right? So let's do that right here, put this right here. You got that liquidity buildup right there. And then what ends up happening is each time it kept going lower, it's been respecting structure. So nice targets for later, essentially. So you got that liquidity right there. And then the market comes, sweeps this low from the left-hand side, right? Trapping buyers. And you can also see this that happen here, right? So you got this. You got this taken out. Market moved higher, right? And then move lower. Got your BOS to the downside. And then trap, right? So this, I believe this was on Thursday. So on Thursday, the market moved higher, right? Trapping sellers right here. You can see there's a shit ton of liquidity right here. You also got some liquidity here. So yeah, what ends up happening is let me just mark this out. Boom. Okay. So the market comes here. You can see this right here. If I go on the 5-minute time frame, it looks a lot better. You got this right here, right? B goes to the downside. And then it's respecting. So this move right here, this false move down was came out of right here, right? The reason why it happened, it is a liquidity block, as you can see. Boom. And then after that came up trapped sellers. And then after trapping sellers, you got this right here. And then boom, right? In terms of entries, I would have not liked it because it is kind of with structure. Like at the same time, it isn't because you got this right here. Boom, right? Causing that low. Just understanding that it should be coming for this right here, right? So that's where the liquidity is. So this would definitely be an entry, right? And then just keeping your stops above this high right here, that liquidity block. And then yeah. Let me mark that out. So let's say you enter right when sellers are trapped on the 5-minute time frame. To be honest, you could have even waited for the tap on the 5-minute. Still, it taps in. But yeah, anyways, you can take it however way you want, as long as you keep your stops above that liquidity block, right? So enter right there, stops above the liquidity block, and then straight towards the lows. Basically where the liquidity is. And then what you see is this move down, right? Coming to this low, okay? And then you got this reaction up. Now, all this does right here is basically engineer that liquidity. As you can see, engineers that liquidity for us to take more shorts, right? After that pullback. So basically you see this move up, right? This false move up. Look at all that volume, right? Induces buyers. And then you got this liquidity here. Look at that structural liquidity that was left. That got swept. That structural liquidity got swept. And then you got your liquidity block over here, right? So you could have entered here. Would you consider this high probably as its structure? Well, it's not really with structure if you look at it this way, right? It depends on how you look at it. So on the 15-minute time frame, you can see you got this, right? The low got swept, market pulls back, continues lower. So you got this new low printed, and then this new, I'd say, lower high printed, and then the sweep of that, new lower low, and then breaks above the lower high, right? So causing that break of structure. If you look at it that way, then you can say um it is it makes a lot more sense that way. It's kind of like the gold trade I took on Monday, right? So if you go on gold, uh, right here, that gold trade on Monday, you can see it right here. Same thing, right? You got that sweep right here, boom, inducing sellers, and then you got that trap. So I'm going to 5 actually. Yeah, so you got that sweep inducing sellers, and then you got that trap, and then you also got the liquidity block above. So yeah, it's kind of like that gold sell. So yeah, Nas. Yeah, so what was I saying? Yeah, so the market engineers more liquidity to the downside, comes here, takes out that structural liquidity on the 1 minute time frame right here. That structural liquidity, low taken, came respected the high, and then came and swept that, right? So you could have entered right when that liquidity was taken, right? And then keeping your stops above the liquidity block, or you could have waited for either the tap of this lower here, right? This whole area essentially being that liquidity block, or I'd say higher time frame liquidity block. Well, not even higher time frame, probably like 5 minute or 15. But yeah, so you could have just entered like that. That's another way you could have entered. Make that blue. Delete this one. Okay. And then lastly, you could have just waited for the extreme if you really wanted to. And you can see came for this inducement high right here. And you could have entered there too. All right, so entry there. Stops above the liquidity block. And then straight to the lows. All right, so you got basically the move from here and then continuations lower. Very much for Nas. Okay, so that was Thursday. If you go on Friday, so the longs I took were on Friday. So move my drawings again. Let's remark it out. Actually, wait, hold up. Then it just grabs everything. Okay, whatever. Let's just leave that there. Okay, so as you can see, or as I mentioned before, right, you can see that the market was building that liquidity over here, right? Basically, all these highs right here. And then you see that sweep of liquidity over here tapping into this low right here. So if I go on the 1 hour time frame, all right, so got that right there, came into the extreme and then started moving away. Okay, so let's see, this was Thursday, like 2 p.m. I believe. So basically late New York, or after it was yeah, the afternoon session, PM session. You got that right there. Move higher, right? So you got that liquidity block there. And then pretty much the market is just moving to the upside, right? You got a lot of liquidity to the upside to basically target the market is just moving higher, whatever. And then see, I hop on after like if I'm gonna be trading indices, I will be hopping on after New York Stock Exchange open. So 9:30. So obviously 9:30, market just shoots to this high, right? Shoots to the high, and respects the high to the left-hand side. Right, so it comes and respects this high to the left-hand side. And then yeah, so before that, you got this as well. Let me draw it out. So you got that, boom, and then that trap, right? So let's mark it over here. Takes out the high, right? Inducing buyers, and then trapping buyers right here, right there. Obviously, also came for this lower here. Yeah, pretty much traps buyers, and then you also got this move right here. Obviously, nothing I'll be taking because you got stock exchange opening up real soon. So this isn't something I'll be taking. But yeah, comes respects the high, induces sellers by taking out this lower here, and then the market moves to the upside, right? So if you go to the 1 minute time frame, okay. So I did keep in mind that there was liquidity that was built below here. Let's mark it out. Okay. So I did keep in mind there's a lot of liquidity being built here, right? I understood there's a lot of liquidity there, but I also understood the fact that it could come for it later, right? So just understanding that, you have to go based off what price action is telling you in that given moment. So what I seen was market printed this high, came here, just took it out right here. But yeah. Let's just delete that though. All right, so the market came here, went lower, right? Took out this low right here. Okay. And this being a liquidity block is the reason why it moved higher. Nothing I like, so I wouldn't be taking this. I waited for more price action. You got the high taken out, inducing buyers, right? Also, this high took out that high from the left-hand side I was talking about. This one right here. And then after that, started moving to the downside, right? So you got this whole area right here. You can see gave some reaction out of this area as well, right? And then it started trickling down. So yeah, the market comes, takes out all this area, all the liquidity it's built up here. So let's do this red right here. Boom. So when the market came here, printed this low, right, reacted from this whole area and then went higher, right? So inducing buyers, taking out this high induces buyers, and the market comes lower, takes out the low, okay, causing that BOS to the downside, right? Trapping buyers, inducing sellers. Also took the area that I built liquidity at, right? So came here, built liquidity there, okay? You got that liquidity build up there. And then the market starts moving to the upside. So what I did was 1 second. Okay. Now this was very, very cheeky. Took out this high right here, and then came and swept this low right here. So I took a small little entry here because obviously not the greatest looking one, but yeah, pretty much took a small entry here, and then keep your stops below the liquidity block. I actually did wait for the tap over here somewhere. But yeah, I waited for basically a deeper pullback because our RYs I didn't really like too much. Because I know I want to take some partials here because it's a Friday. So I would want to take a partial above here and then hold the rest of the highs. All right, so you got these highs. To be honest, you got this high right here, but this is what I targeted because late on a Friday. So yeah, pretty much. And then let's see. Yeah. So then that was the first entry that I took. After that, yeah, so you see this right here, market comes here into this whole area. Princess low, right? You got a miniature liquidity block right here that was printed. I didn't enter here, obviously. Just took out the high and then came lower. I was just seeing what price action was doing. After that, you can see it printed this high, printed this low, and then moved higher, right? And then you got this move to the upside, right? US to the upside. And then pretty much came lower, took out this low right here. See, I did this at the current time. I was driving. So I entered as soon as the low got stabbed there. I probably like honestly, it would have been a lot safer to hold it to this low right here. I mean, keep your stops there. I wasn't really looking too carefully. But I mean, I did see this right here before. So when I was driving, I just entered another position right there, and then kept my stops below the low, and then I targeted the highs. Right, so took this one, I took partials. Well, this one I actually closed full position as soon as this high got taken out. Which was right here. And obviously holding the other one, the other position I took, which was right here. 1 second. Yeah, so the other position, I held full position to these highs. And then this one, I took partials as soon as the high got taken out. So yeah, pretty much. Obviously, I didn't actually keep my stops exactly at this low. Like I kept a little bit of breathing room. But yeah, pretty much. That's about it for the trade on NAS from Friday. Anyone have any questions? All good, all good. Okay, perfect. NAS on higher time frame. Let's see. Well, to be honest, I did see something kind of interesting on NAS on the higher time frames. What was it again? Okay, so the interesting thing about the higher time frames on NAS was yeah, this right here. Let's see. I think it was the monthly. Yeah, it took out monthly high, right? So low key could possibly come for it. Obviously that's not like I'm not really too thing about that right now. Or is it? Yeah, pretty much. But you know, it is interesting to see. Maybe it does come for it. But I mean, Nas has just been going higher each time, so we'll see. There is, you can say, possibly that structural liquidity that was built. All right, plus took out this high, blah blah blah. But yeah, pretty much. On the higher time frames though, it did take out this daily. Yes, sir. Okay, so you do see this being taken out on the daily. I believe that was also previous week. No, that's not weekly. Yeah, so previous weekly is up here. Maybe next week opens up, takes out previous weekly, and then goes lower, right? So that is a possibility. But yeah, pretty much I do see it maybe coming for this, right? You got that area respected. So yeah, pretty much. I don't like predicting too much, especially because Nas, if you look at it on the weekly time frame, it's all the way at this high, right? There's nothing to the left. So I wouldn't be predicting sells like that. I'll just go based off whatever price action tells me. So like if you see or if I see a move away, sorry, 1 second. Yeah, so if I do see a move away, or let's say it comes here or move away from this area and then starts moving to the downside, and along the way, if it traps sellers, right, inducing buyers, trap sellers, and then maybe something like this,